Hello, and welcome to Explain the Charts. Today, April 22nd, 2025, we're analyzing the S&P 500, SPY, diving into both the latest news and the chart data to understand potential future movements. First, let's recap the recent news headlines related to the S&P 500. We've seen reports of market volatility, including significant drops due to President Trump's renewed calls for lower interest rates and his ongoing friction with Fed Chair Powell. Concerns about potential tariffs are also weighing on the market. There's speculation about a possible stock market crash in 2025, fueled by inflation concerns and trade tensions. However, Goldman Sachs is forecasting a 10% return for the S&P 500 in 2025, driven by economic expansion and earnings growth. Now, let's switch to the charts and see how this news correlates with the technical data. Let's start with the daily chart of SPY. Looking at the recent price action, we see a significant drop in early April, followed by a recovery. The candle on April 4th, 2025 is a large red candle, indicating a sharp sell-off, potentially linked to the tariff and interest rate concerns. We then see a green candle, a bullish engulfing pattern on April 7th, which attempted a recovery but was met with stiff retracement. Then we saw a large green candle on April 9th as dip buyers showed up en masse. We can see the market trying to find its footing. If the market sentiment regarding Trump's policies and Powell shifts, we might see it test the 540 range and even higher, potentially echoing Goldman Sachs' prediction. But uncertainty may keep that from happening. Now let's zoom into the hourly chart for a more detailed view of recent price action. We're filtering between April 1st and April 8th to get a closer look. On April 2nd, we can see the price sharply moved down intraday and tried to recover throughout the day. April 3rd showed a lot more selling pressure. But then April 7th showed the attempt to push up, though it met severe resistance from the bears and a very long wick downward. Zooming into the 15-minute chart for April 17th and 21st, we can see the market is currently trending slightly downwards with minimal volatility. It's tightly trading between 520 and 530 for most of the day, with volume drying up during the current trading hours. So, what are the key levels to watch? Support seems to be around the 505 to 510 area. If that level breaks, we could see a further decline towards 480 to 490. Resistance is around 535, and a sustained break above that level would be bullish, potentially confirming Goldman Sachs' 6,500 target by year's end. However, given the uncertainties surrounding tariffs and Fed policy, a more conservative target would be between 570 to 590. Pay close attention to any news regarding trade talks and Fed announcements. These will likely be the major catalysts driving SPY's price action in the short to medium term. Keep an eye on volume as confirmation of any breakouts or breakdowns.